Inox Wind is also can be in focus, where Nuvama has come out with a note and they have maintained their buy rating with target price of rupees 190. They say that the Inox Green has entered into solar operation and maintenance, and together the group has become a lean and integrated renewable energy platform, and the revenue visibility is strong until FY27, which is supported by 3.1 gigawatt order book. Nuvama has come out with a note on the cement channel check, where they have say that the demand was weak in August 25, but prices stayed stable across the regions, and price hike attempted in September 25 in South, East and Central India, and they say that the demand may stay soft in the near term due to heavy rains and flood, and Nuvama's top pick from the cement sector is JK Cement. And lastly, Nalco can be in focus by Antique has come out with a note, and they have maintained their buy rating with target price rupees 262. They say that the India's aluminium demand is expected to grow approximately 7.6% CAGR till 2030, which is driven by power, infra and the auto sector, and the China's 45 MTPA aluminium production cap also support prices. They also say that the additional alumina capacity 1 MTPA and cap to coal and lower employee cost to boost the profit. So back of this note, Nalco can be in focus.
All right, so that's the brokerage commentary looking like. But moving on, let's also take stock of what the F&O snapshot is today. How are the F&O trends emerging? Pulkit is now joining us with those details. Pulkit, over to you.
Good morning, Kanishka. So let's start with the India VIX. The India VIX value is currently 10.85, and from last 2 days it is below 11. Please note that after July, this is happening for the very first time that the India VIX value is below 11. Let's move towards the put call ratio. For Nifty, it is around 0.73, and for Bank Nifty, it is around 0.88. For highest open interest strike price, for put, it is 24,500, and for call, it is 25,000. For highest open interest strike price for Bank Nifty, for put it is 54,000, and for call it is 57,000. Let's look towards the FI long position. It is currently at 8.04%, and for DI it is 64.62%. For FNO ban, only one share is there in the FNO ban, that is RBL Bank. Traders, please note that today and Monday, both days will be a settlement holiday, so traders will get their money credited in their demat account on the date of 9th of September because of these two holidays.
So a quick note for traders there on the settlement holidays. But moving on, the Unilever Global CEO Fernando Fernandez commented on India at the Barclays Global Consumer Staples Conference. He aims to make India a primary growth driver alongside the US and is acquiring a new business for better growth. Snehi is now joining us with more details here.
Well, yes, so stock in focus today could be Hindustan Unilever, because we're getting comments from its global CEO, Mr. Fernando Fernandez, as you've just mentioned. And these comments are coming in from the Barclays Global Consumer Staples Conference. So first up, let's discuss what he's spoken about on leadership change. He says that they have made a decisive, sweeping leadership reshuffle in India, and changes have been made due to flagging sales growth over the past few quarters. This is something that he has implied. Now, in terms of his comments on the new MD and CEO, Ms. Priya Nair, who's taken charge since the 1st of August, he says that Priya is an important person and I trust 100% and will be very important leader for HUL, and he also believes that she is different from the previous leaders that HUL has seen in India. Overall, his comments on India, if you take a look on that front, he says that they're aiming at making India a primary growth driver alongside their US operations, and India is the second largest market for Unilever after US. They also expect HUL to contribute 14% to the global sales of the company after the ice cream division spin-off is accounted for, and India will be for Unilever what China has been to the competitors of Unilever over the last decade. That's a big statement coming in from the global CEO. And he also says that India is the only large exponential volume growth opportunity in the globe. So again, big statement coming in on India, and for which they are also acquiring new businesses in India, case in point being Minimalist, their most recent acquisition. And lastly, he's also said that GDP real growth should be a good proxy for the company's volume growth overall. So those are some of the comments that the global CEO of Unilever, that's Mr. Fernando Fernandez, has made at this conference, and lots has been spoken about in terms of the new management rejig as well as their growth plans for the Indian arm.
Thank you, Snehi, for taking us through all those details. Big comments coming from the global CEO CEO. HUL is the stock that will be in focus today. But with that, we're completely timed out in this edition of Market Cafe. I'll take your leave, but don't go anywhere as the market will take all the action forward.
We are learning that a significant GST reduction is expected on farming machinery. GST on majority of handicraft items likely to come under 5% slab. The GST Council addressed inverted duty structure in the fertilizer sector. The GST on majority of medical devices likely to come under 5% slab. The GST GM1 rate rationalization made a proposal to hike GST on high-end cars from 5% to 18%.
Hi there, welcome back to ET. Now you're watching Market Cafe with me, Kanishka Sarkar. A very good morning to you. Over the next 1 hour, we'll take you through all the global and domestic cues that you need to watch out for in today's trading session, and also tell you about the stocks that you must watch out for ahead of the trading session on Dalal Street today. So let's get started with an eye on the globe first. Let's see how US markets fared overnight. Now, Wall Street closed higher with all the three key benchmarks gaining on hopes that today's jobs data that could pave way for a Fed rate cut. The S&P 500 rose about 0.8% to a fresh record close. The Nasdaq gained nearly 1%, whereas the Dow that added over 350 points. Well, if you take a look at how the week is going to be, stocks are on pace for a winning week. The S&P 500 has climbed about 0.7% on week, while the technology-heavy Nasdaq Composite that has registered 1.2% gains there. The 30-stock Dow that has also gained 0.2% in terms of the gains coming in for the week. Well, apart from that, all eyes are now on the August non-farm payrolls report that is expected later today. Estimates suggest that it is expected to be around 75,000 jobs added for the month of August. Now, a softer print could strengthen a case for a September rate cut, with markets already pricing in a 97% chance. Meanwhile, we also have Broadcom's strong earnings and upbeat AI outlook that is likely to keep the chip stocks in focus today. That is later today when the US markets open. But apart from that, let's also put the spotlight on how the commodity market is shaping up. While crude prices, they extended their losses for a third straight day, with the Brent slipping towards that $66 per barrel mark, whereas the WTI that was near the $63 barrel mark. Well, the weakness comes ahead of the September 7th, that is over the weekend. On Sunday, we'll have the OPEC Plus meeting, where expectations are building up that the group may approve another supply hike to regain market share. Adding to the pressure, of course, is the US data that has showed a surprise build in crude stockpiles and weekly refinery runs, while worries are also their slowing global demand and trade tariffs. They have kept the sentiment fragile. Now, let's also put the spotlight on how gold is looking. Now, gold is headed for a third straight weekly gain, trading near that $3,552 an ounce mark. In fact, it is near the record levels of surpassing $3,600. Now, it has come down a little bit below its record low, but still continuing to hover around that level. The metal is finding support from safe haven demand and growing bets on Federal Reserve rate cuts, as we mentioned earlier. Now, the market is very closely watching Friday's, that is today's US payrolls report. That is something that is the key to watch. Apart from that, silver is also in focus, hovering around the $40 an ounce mark after a stellar 40% rise this year on both financial and industrial demand. So that's how largely the commodity market is shaping up, and the US markets, they also ended on a positive note. Well, moving on, let's get tracking the top global stories that you must know at this hour. First up, Donald Trump has signed an order slashing tariffs on Japanese autos to 15% from 27.5% earlier, capping many other goods at the same level. Now, this move implements a trade pact with Tokyo after weeks of wrangling over details. Now, Japan's envoy pressed Washington to finalize the deal, which now applies retroactively to shipments from August 7th itself. Now, the White House says that modifications will take effect within 7 days of publication, though separate 25% tariff, that is auto part tariffs, will remain in focus. Next up, we have another news update coming up as far as Trump's meetings are concerned. Now, he has pressed America's top tech CEOs to spell out their U.S. investment commitments at a White House dinner last evening. Meta's Mark Zuckerberg committed to $600 billion through 2028. Apple's Tim Cook has repeated a $600 billion commitment. Meanwhile, Google's Sundar Pichai has also cited $250 billion and praised Trump's AI action plan. Next up, we have Microsoft founder Bill Gates, who has touted health innovations, while Elon Musk, he was absent following the rift with Trump that we have been watching. Moving on now, the U.S. president says that his administration will impose tariffs on semiconductor imports from firms that don't shift production to the U.S. Now, he was speaking before the dinner with the tech CEOs. He has described the duties as substantial but not that high and said that the companies planning to build in America would be exempt. Next up, shifting focus on the New York Fed President John Williams says that modest policy restriction remains appropriate as inflation cools, but warns that tariffs must not fuel broader price pressures. He has also emphasized that the risk of keeping monetary policy too tight for too long, that could hurt jobs, though noted that no second-round tariff effect so far is what is being seen. He has also added that the Fed's balance sheet reduction is running smoothly, with reserves expected to decline more significantly going ahead. In terms of earnings, we have Broadcom stock, which was surging yesterday after revealing a mysterious $10 billion AI customer. The chip maker posted stronger than expected earnings, with sales jumping 22%. Shares, in fact, nearly doubled over the past year as Broadcom cements itself at the heart of the AI boom. In a somber update, a third earthquake has struck southeastern Afghanistan days after powerful tremors killed more than 2,200 people. Officials say over 3,600 are injured and some 84,000 have been affected, with some villages reporting nearly total destruction. Survivors face homelessness and food shortages as aid agencies warn resources are running thin. All right, so those were the global updates that we are tracking at this hour. But moving on to some domestic news then. Now, the GST 2.0 boost was seen to fizzle out on D Street yesterday. Benchmarks ended the day with modest gains, whereas the mid-cap and small-cap segments, they suffered significant losses. Now, let's go across to my colleague Snehi, who's standing by to get us all the market action from the street yesterday.
Well, yes, an absolutely lackluster day of trade is what we saw yesterday for our markets. Even that GST boost from the government could not provide any incremental fillip to the market yesterday, because if you take a look at Nifty, it started strong but ended rather subdued at 24,733 thereabouts. So very flat, with a very absolutely flat rather you could call the Nifty. For sensex too, similar moves coming in. 80,700 plus is where we've closed over there. You had India VIX that cooled off slightly further. You have Nifty Bank that was subdued and on the flat line with a hint of a negative bias. So that was how the market construct was. But the trend that we have been seeing for the last couple of trading sessions is that the broader markets have been outperforming the Nifty, and yesterday that was entirely reversed, because you did have the broader markets that were seeing a much more of a dip compared to the benchmarks. Case in point being the Nifty mid cap and small cap both lower by 6 or 0.7%. Other than that, if you still take a look at some gainers and losers from the Nifty pack, M&M continued to stay strong, a 6% uptick coming over there, followed by Bajaj Finance up 4.5%, Apollo Hospitals, Bajaj Finserv, Nestle, Grasim, Trent. So a mixed bag of auto, financials and consumption is something that aided some sort of strength to the Nifty. On the flip side, HDFC Life, Tata Consumer surprisingly from the staples pack, IndusInd Bank, Wipro, Maruti Suzuki, BEL, HCL Tech, Power Grid, all of these were stocks that were tanking in excess of 1% and led to a lot of the cut that we've seen on Nifty. Sectoral only auto, financial services, FMCG did well. Nifty Bank was on the flat line. So you had names like M&M, Eicher, TVS, Hero MotoCorp from the auto pack, Bajaj Finance, Bajaj Finserv, Muthoot Finance, Chola, HDFC Bank that did well from financials, and from FMCG, Imami, Colgate, Britannia, Dabur, Nestle, ITC. All of them held on to gains anywhere between 1 and 4%. What did not do well yesterday was Nifty 5. Pharma, Metal, Realty, Energy, IT and PSU banks. PSU banks were your biggest sectoral loser yesterday. Cuts led by IOB, Canara Bank, Bank of Baroda and Maharashtra Bank as well. Other than that, stationary player DOMS was very strong, up 7.5%. Bata also did well on the back of that GST cut coming in on footwear. So both of those stocks were in focus. Ola Electric was one of the biggest Nifty 500 losers, a 6.5% cut coming in after SoftBank paired its stake in the stock. So that stock was seeing some cuts, followed by shipping, Garden Reach, you had Cochin Shipyard. All of these stocks were tanking, but so was a Paytm, down 3.5%. So that was the roundup of the market yesterday. All eyes are going to be on how the market pans out and what our status is on the last trading day of the week.
Right, absolutely. We'll watch out for how the status is for D Street on the last trading day of the week. But before that, let's take a look at what are the stocks that we need to watch out for today. And Ashesha is standing by with just that list. Ashesha, over to you. Which are the stocks that you're tracking today?
Well, yes, first up, let's put the spotlight on Aarti Drugs, where the company has announced some capex plans, 220 crore investment. The company also says that they've commenced commercial operations at their Gujarat plant, which has about 60 MTD capacity. So 220 crore investment, and it has already commenced commercial operations. Keep an eye out on Aarti Drugs. Concor has meanwhile gone ahead and signed an MOU with Bhavnagar Port Infrastructure. The company says this is to operate and maintain upcoming container terminal at Bhavnagar Port, and this also marks company's entry into port operations. So new venture coming their way. This stock will also be in focus. IHCL meanwhile, where the company says that they've detected malware incident. Company says that IT software was affected due to an incident, and company also claims that immediate action will be taken in order to identify and solve this particular problem. So keep an eye out on IHCL as well. Meanwhile, shifting focus to the IT sector then, and HCL Tech will be in focus because the company has partnered with SailPoint. This is to deliver AI-driven identity security at enterprise scale. And lastly, Sanman Capital, some leadership changes coming in over here, where the company has informed the exchanges that Himanshu Modi has been appointed as the deputy CEO, and he also held leadership roles at Barclays, SL Group and Suzlon prior to this. So keep an eye out on this counter as well.
Thanks, Shesha, for taking us through all those details. But Sharad, let me come to you now. You also have a couple of stocks on your list, the likes of ones from Pharma and Defense Pack as well. What's the news flow here?
First stock, Bicon. Its arm, Bicon Biologics facility, has received 5 Form 483 observations for its Bengaluru facility as well. Now, the result is expected to be negative. Also, Aarti Drugs, the company has commenced its commercial productions at its Gujarat plant with a capacity of almost 60 million tons per year capacity and a 220 crore investment. Also, Zydus Life Science, positive news flow coming in as company has entered into an exclusive licensing and supply agreement with Synthon for Ozanimod capsules as well. Up next, Bharat Forge, its arm has acquired 950 acres in Andhra Pradesh to set up a defense energetics manufacturing complex. Interestingly, ICICI Pru, SBI Life and HDFC Life came out with their exchange filings, and there's a very little impact on their embedded value because of GST rationalization, and it ranges between 0.2% to 1% for all three. Varun Beverages, the company has interestingly shifted a little bit of business product. They have incorporated a JV company in India to carry out the business of manufacturing of Visi coolers and other refrigeration equipments as well.
All right, so a whole host of stocks to keep an eye out for. Thank you, Ashesha and Sharad, for all that we need to track today. But Snehi, let me come back to you. Which are the cues that we must watch out for today?
Well, there's lots of cues to watch out for, and back home we're expecting to see the forex reserves data, so that is going to be a macroeconomic indicator to watch out for. Globally, from the US, non-farm payrolls and unemployment data, along with retail sales from the UK, as well as the GDP number from Eurozone. This is going to be a very important macroeconomic indicator to track, so watch out for this very carefully. But once again, shifting focus back home and talking about some important corporate action and board meetings on the back of which some stocks could be in focus. You'll have PNB Housing Finance and Suntech Realty. The boards of both of these companies are going to be mulling fundraising tomorrow, so watch out for any announcement on this front and the stock impact created by that. Also, SpiceJet is going to be coming out with its quarter 1 earnings. So that's the aviation major SpiceJet, and that will be in focus on the back of its quarter 1 earnings. In terms of annual general meetings, 361 WAM will be holding its meeting as well. So watch out for all of these cues, all of them very important to track.
Thanks, Nehi, for taking us through all those cues. But let's shift focus and take stock of how the Asian Pacific markets have opened up this morning. Well, it's largely a sea of green coming in for the Asian markets. They've opened higher today after overnight the US President Donald Trump, he signed the executive order formalizing lower Japanese auto import tariffs of 15% down from 27.5% earlier. Now remember, the order also confirms that the agreement of $550 billion of Japanese investment in US projects, and as you can see, the market is reacting quite positively to it. Japan's Nikkei index that's trading nearly 1% higher at that 42,950 level. In fact, it is also impacted by Japan's July household spending data that rose 1.4% on a year-on-year basis for the month of July. Well, next up, let's put the spotlight on Hong Kong's Hang Seng index that's also trading in the green. 0.2%, nearly 0.3% gains coming in at that 25,130 level. It's only the China's Shanghai index which is trading lower as we speak. It's down about 0.4% at the 3,750 odd level. On the other hand, we have Australia's ASX 200 which is also trading in the green. 0.3% gains coming in at that 8,850 odd level. So that's how largely the Asian markets are faring. South Korea's Kospi index that also continues to trade in the green, largely flat but trading with a positive hint. It's at that 3,200 odd level as we speak. On the other hand, if we take a look at how Indian markets are supposed to open this week, this Friday morning, well, we did manage to end above that 24,700 level. But we ended the day near the day's low point and at the 24,734 level. But as we can see, and on your screens, the Nifty implied open is suggesting a positive start for the day. Nearly 0.3% gains is what we are expecting. 67 odd points of gains is what we are expecting at the start of the D Street this morning. Well, that's how we are expecting a positive start for the Indian markets. But on that note, we'll take a very short break. Be right back with more news and updates coming up on the other side.
That will be amply compensated by the boost in demand itself.
I think if you see this entire activity, that is going to generate a lot of consumer demands in the economy. I think retail loans, definitely it is going to pick up.
I think it's a wonderful move. I think it's also wrong to believe that in the long term there will be loss to revenue. There will actually be a gain in revenue.
This will enable a lot more people to buy. The government is sending a message that these are very important products. That is why we have made GST on these products zero.
18% GST going down to zero has a huge difference.
And as an industry, I do feel we will step up to make sure that the full benefit of exemption is passed on.
It is always there when the downstream garment will grow, whole value chain will grow.
And the apparel, which used to be 5 and 12, has moved from 5 to 18%, and the demand will go up for that as well.
Hi there, welcome back to ET. Now you're watching Market Cafe with me, Kanishka Sarkar. Well, let's get tracking some top stories back home. And of course, the biggest story that we're tracking here is India's GST system that is getting a major overhaul with the next-gen GST reform effective September 22nd, 2025. Now, the GST Council has streamlined tax slabs to a 5% for essentials and 18% for most other goods, and has scrapped the 12% and 28% rates with a 40% slab for luxury and thin goods. Now, essentials like toothpaste, soap, and small cars will see lower prices, while health insurance and unpackaged paneer, these things are exempt from tax as of now. Businesses, especially MSMEs, will benefit from simpler compliance and faster refunds as well. Now, economists predict 100 to 120 basis point boost to GDP through the government, though the government expects a short-term revenue dip. Speaking on the new GST reforms, Prime Minister Narendra Modi, he highlighted how it will benefit the idea of Atmanirbhar Bharat. Let's listen into what else he had to say.
ट्रैक्टर हो या सिंचाई के उपकरण हो, हाथ के औजार हो, पंपिंग सेट्स हो, ऐसे उपकरणों पर 12 से 14% तक टैक्स लिया जाता था। अब ऐसे अनेक सामानों पर जीएसटी 0 या 5% कर दिया गया है। साथियों, विकसित भारत का एक और स्तंभ है हमारी युवा शक्ति। हमारे नौजवानों को ज्यादा रोजगार मिले, जो छोटे मोटे बिजनेस में है उनको आसानी हो, ये भी सुनिश्चित किया गया है। हमारे जो ऐसे सेक्टर हैं जिसमें सबसे ज्यादा लेबर लगती है, उनको जीएसटी की कम दरों से बहुत बड़ा सहारा मिलने वाला है। टेक्सटाइल हो, हैंडीक्राफ्ट हो, लेदर हो, इसमें काम करने वाले साथी, इस बिजनेस से जुड़े साथियों को बड़ी मदद मिली है। इसके साथ साथ कपड़ों और जूतों की कीमतों में भी बहुत कमी आने वाली है। हमारे स्टार्टअप्स, एमएसएमई, छोटे व्यापारी, कारोबारियों के लिए टैक्स तो कम हुआ ही है, साथ ही कुछ प्रक्रियाओं को भी सरल किया गया है। इससे उनकी सहूलियत और बढ़ेगी। साथियों, नौजवानों को एक और फायदा फिटनेस के सेक्टर में भी होने वाला है। जिम, सैलून, योगा जैसी सर्विसेज पर टैक्स कम किया गया है। यानी हमारा नौजवान फिट भी होगा और हिट भी होगा।
All right, so that's the word coming from Prime Minister Narendra Modi on the big GST reforms that have come in. Now, big export opportunities are also opening up in textiles and seafood. That's the word coming from Commerce Minister Piyush Goyal. Group editor of Times Network, Navika Kumar, spoke to Commerce Minister Piyush Goyal. Let's listen into an excerpt of their conversation.
India has always converted every adversity, every situation into an opportunity. Whether it was, if you look back, 2000, when the millennia was to change, the Y2K bug, the world thought the sky is going to fall on their head. India grasped that opportunity, and today our IT sector is recognized all over the world as the talent provider to businesses. The global financial crisis hit the world. Indian business private sector stood their ground. COVID, the worst pandemic in a century. Under Prime Minister Narendra Modi's leadership, we not only became Atmanirbhar in several areas, we not only reached out to the people and ensured that all the naysayers were proven wrong, but I've never looked back since then. The economy is on a roll. Fastest growing economy ever since post-COVID. This time around also, I can assure you, India's exports will be higher than last year. Our trading relationships are expanding across the globe. The European Commission and we are in active negotiations for an FTA. We are working with Australia for a second tranche of an FTA. I have launched negotiations with New Zealand, which should end before the end of the year. Oman FTA will be announced in the next few weeks. Chile and Peru FTA is under active negotiation. There are other countries who are waiting to start negotiations. I don't have the bandwidth. Eurasia terms of reference have been finalized. With the US, we are talking about a bilateral trade agreement which is to be finalized by fall, which is by November of this year. So India is across the world looking at trading partners with whom we can do fair, equitable and mutually beneficial trade agreements. We are open to fair deals. We are open to working with the developed world and providing more and more opportunities for our businesses, which will ultimately translate into a wider good of the people of India.
But 50% tariffs from the United States of America. Is this our Y2K moment?
Every moment that causes some volatility, some uncertainty is a moment for this country to grasp. And I can assure you we are all, whether it is the business community or the ministry, the whole of the government is working in conjunction with the private sector. We are looking at trade diversion across the world to expand our trade with other friendly countries. We are looking at a greater share of consumer demand in the domestic market. After all these GST reforms, almost every item of public good, every item that the common man uses, textiles, footwear, pharmaceuticals. This morning I was with the entire pharma industry at Bharat Mandapam. They are so excited. Almost everything that the pharmaceutical industry produces, life-saving drugs, the medical equipment, so many things have received significant benefit. Machinery required.
All right, so that's the word coming in from Commerce Minister Piyush Goyal on a plethora of export opportunities that are coming up next. But moving on, R. Dinesh, the chairman of TVS Supply Chain Solutions, spoke to my colleague Jude Sanith about the next gen GST reforms. Let's take a look at his comments.
So I think, as always, I think we are dependent on the growth happening in the economy in general first, primary. And I think this is, as I said, a best kickstart which we can have. As both from not just as a supply chain company, but as a supply chain sector, if I look at it, I think it becomes very important that we have the goods available in every part of the country. So as we look at the demand forecasting and work with each of our customers in that sector, I think it's a great opportunity. First and foremost will be to make sure that what stocks we have, how do we reach the consumer at the fastest speed and make sure that we complete that sale. Second is planning for the growth which is going to happen going forward. And anyway, with the festive season very much part of this growth story, I expect that we will have, I would call it, to be on our feet to make sure that we meet the customer expectations and our client expectations.
Right. If you were to ascribe a number to the upside that the overall supply chain sector would experience by way of the rate cuts and the kind of new stock that you expect, would you be able to hazard a guess or a projection in terms of how much of a benefit to the sector this decision will have with it?
No, I think we have to look at it from a GDP perspective and the goods movement perspective. I believe that the more demand which takes place in rural economy, the more demand which takes place in what I would call the far-flung areas of the country, means that a little bit of supply chain efficiency improvement and implementation will be happening. So if I look at it, it will be, I would call it anywhere between 2 to 3 times the growth which you see in the goods side. So that's the way we look at the potential opportunity from a supply chain side. To hazard a guess on the percentage will be very difficult, but I guess right now what we are hearing is anywhere it could impact as much as maybe 1% on GDP, which will be great. We are entering the festive season, and I think the timing of this has been perfect because we are, getting it done in phases. and especially starting from 22nd September. So if I look at it, I think we still have almost a 1 month lead time to the peak of the festive season. So I don't think that is going to be a major stress. Yes, the planning is going to be very important, and that's where the quality of the supply chain companies and the services which they provide become a differentiator. But as of now, I don't see that. But I think we have to go sector by sector, and we also have to go, I would call it region by region. I think the good news is that everyone was aware this is happening, and the timing of it in phases, I think, helps a lot.
All right, so that's the word coming in from TVS supply chain. But moving on and keeping it with the GST space, then the reforms that have come in, well, it's a breather for auto companies as the centre has finally lowered the rates on vehicles. So is this festive season going to spread cheer for Motown? Top leaders of auto companies shared their views with us. Let's take a look.
Every part of our portfolio gaining. EV, of course, stays at 5%, which is good news. It reinforces the government's commitment to EV being the destination technology for the country. We will be working through the industry body SIAM to take this up with the government and get clarity over the next few days. But these are transition issues, and I'm sure we'll work around that.
Regarding the cess, which is already in our books for the vehicles in stock, I'm sure the government is going to show us a way forward to clear this ambiguity and move forward. Regarding the festive season, yes, the festive season is coming in hard and fast. So the quicker we react to this, the quicker we are able to understand what the implications of cess is going to be going in the future. I think it's going to be great for the industry and a lot of good things to come.
The industry has been under the inventory duty structure earlier, and now with the cut in the input taxes also, and the input costs have also been going to go down. But still, it may remain under inventory duty structure, but the incidence of inversion will come down significantly from where it was earlier. So that's a positive move for the industry also, but this will have a positive impact on the working capital as far as the companies are concerned. At the same time, we'll be able to pass on more or less the entire benefit to the farmers community.
The biggest boost is going to come on the entry side and first-time buyers, because there will be many of such buyers who are not considering buying a car because it was out of their budget. While as SIAM, we have given a request to the government to come with some kind of a transitionary mechanism to deal with this situation. So I think we'll wait for clarification on this, and we'll continue to engage with the government.
All right, so that's the word coming in from auto companies. But let's also listen into what Harma Sorabji, editor Autocar India, has to say about the GST reforms.
The center of gravity has been the mid-size SUV segment, kind of dominated by the Creta, which sells 15,000 plus. That's really been a sweet spot for manufacturers because it's a combination of good margins and good volume. So, from a profitability standpoint, that's really good. So there will be some benefit over there. But the segment below, which is a compact SUV segment, which is actually much more crowded, much more competitive, you don't get the same volumes. But I think with this, the kind of tax reduction right now, I think that segment is poised to grow dramatically.
All right, moving on, as the centre is going to roll out the revamped version of GST. India's biggest banks and financial companies, they expect a strong growth in credit demand. Let's listen to their expectations from the GST reforms.
We expect a boost not only from the auto demand for auto has to go up. So we see the growth which was not there. It was muted, quite muted, I would say, demand for auto. So that definitely is likely to go up after the festive season starts. That typically happens otherwise also every year. But with this coming, the demand should be much more this side. And at the same time, we will see maybe more demand for credit from the OEMs and the ancillary industries.
It is going to bring the momentum in the retail, agri, MSME, because the focus is on the common man, labor-intensive industries, agriculture, farmers, healthcare, and these are the key drivers of the economy. So going forward, I think we see a lot of opportunities going to come in all these critical space of the drivers of the economy.
This comes as a relief or some kind of sentiment to look into buying new or upgrading themselves. And that will definitely boost the credit demand. A lot of people delayed their upgradation of their vehicles in the last 2-3 years because of price increase. And people would now look at this opportunity to upgrade their vehicles. And that will definitely help for us in increasing our lending.
All right, so that's the word coming in from the financial space. But we also caught up with a whole host of experts to decode what's going to be the impact of GST reforms. Let's take a look.
GST was proving very messy and processes therein very complicated. And there's been some very important announcements which I think are very important for us to highlight, including the setting up of an appellate system. But I would believe that what goes before the appellate will also go down because there's so much more clarity now because there isn't all of this rate confusion and construction of how that applies to the different sectors. So if we see easier implementation, we see more companies coming into the GST net, we see revenues go up, so the actual GST quantum continues to go up even while rates have come down.
India stands vis-a-vis other countries. So roughly about 160 odd countries have VAT soaked GST. And the rate ranges from, say, I think there's a country called Aruba where the rate is 1.5%. But countries like Malaysia have rates of 6%, Singapore probably has a rate of 7%, and then the GST rate goes as high as 25%, I think in Sweden, and 27% in Hungary. So India, with an average rate of 11.5%, is up there with the developed countries. The average rate in 148 odd countries, is roughly 16%. So if you're talking about 11.5% of average GST rate, I think we are at a very, very good stature vis-a-vis other countries. Also, India is not the only country to have, two-tier rates. So there were about 6-7 countries which had 4-tier rates. Now there are 28 countries which have 2-tier rates, and about 40 odd countries have 1-tier rates. So of course, we would also want to go the Singapore way, Australia way, where there's just one GST rate across goods and services. But having said that, in terms of where we stand in the pecking order, I think India is up there with other countries with a rate of 11.8%.
All right, so that's the expert word coming in on the impact that GST 2.0 reforms are going to have on the Indian economy and India Inc. But moving on to some more domestic stories then. Now, Prime Minister Narendra Modi held a joint telephone conversation with European Council President and European Commission President as well. The leaders reviewed progress in key areas including trade, technology and security, reaffirmed commitment to an early India-EU FTA and also discussed the Ukraine conflict. Prime Minister Modi also invited them to India for the next India-EU summit. Next up, the death toll from the recent floods in Punjab has risen to 43. As per the latest data coming from the government of Punjab, 1,902 villages resumption of classes in all government and private schools of the valley from September 8th. Next up, India clinched a dominant 4-1 victory over Malaysia in their Asia Cup Super 4 hockey match. The win strengthens India's position in the tournament as they continue their push for the title. Well, those are the top stories that we are tracking this morning. But on that note, we'll take a very short break. Be right back with more news and updates coming up.